The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 1st of August, Tuesday. We're looking at the Dow up 88 to 35,648, having made a new recovery high, gone above the 35,612 high that was made, I think, last Thursday. Thursday. And now we're looking at 35,679 as the high of the day so far. Here's what I'm looking at. I'll do this slowly, one at a time. The daily, weekly, monthly. Daily's on the left, weekly in the middle, monthly on the right. We've started a new month, and that means that the monthly chart has gone to a new recovery high. That extends leg B. You cannot get a peak B until all of August and all of September is finished. That's the way the Chapman wave works, bar by bar. You're looking at a 1-minute chart. It's the same principle. We just went, if I can just get to that there. We just went to a peak D. You're always looking for peak Ds, the fourth highest peak. Maybe an E in the daily in the chart from a buy signal to a buy mode, and then anything can happen. Look at these big pullbacks. This is an E, took time. The 9-period moving average held. There's a 1-minute E-mini chart. S&P goes to a D, pulls back, and now it's just consolidating. It did go to a leg C in the 5-minute chart with the stochastic at 83%. That's good. MACD is strong. 9 is strong. So there could be a momentary pop to the upside to go to the D. And the 10-minute chart has gone to a B. I have got an up arrow, but the stochastic's only at 76%. It keeps pulling back. So this is what I'm looking at. The reason why I'm showing you this is because exactly what I'm talking about here applies 1-minute chart, 5-minute chart, 10-minute chart, daily chart, weekly. It doesn't matter. It's the same principle. However, the big difference here is I love to look at cup formations, arch formations, and within that context, there's a bigger cup formation and then a breakout with a little handle. And that very often says that the breakout level, in this case, around about the 34,712 area, that's going to be key support in any pullback. That is any pullback that is fairly deep. At this point, it's 35,200 to 35,100 that we're looking at. It's absolutely imperative to hold on the short term for the Dow. But as I said, leg B in the monthly chart, 36,952 was the all-time high. The most recent high was today at 35,679. 1,300 points. Wow. I mean, it could do that in a second, but it could also drop 1,300 points because I'm looking at something that's really important. Let me just finish this quickly. S&P. Kind of stalling here, still above, but the 9 is above the 14. But look, the price is getting closer and closer to the green. It's tested it once. I'm probably going to test it again. That's why I'm doing this rectangle. This rectangle says, hey, within the context of borders, look at what's going on here. A push into the 4607.07. Let me just type that in. 4607.07. It's unusual to have that matched right there. That's going to be a move above that. It's really important because it means there's still residual strength. If there is a pullback and you start to see 45.58, 45.52 hit, all of a sudden this is starting to stall, and you'll see that green 9-period moving average moving down slowly. But to get it ready to turn negative, and that's the reason why I'm saying it's very selective. Yes, we've taken a short position in one of the indices, but most importantly, we've taken it a very one-to-one with a fairly wide stop, because I think this is a whole process that says to me, we're beginning the arching over process. And that should take a little bit of time, unless it's really bad news. I'm going to get to that in a moment. The QQQ, 1, 2, 3, there we go, has not broken above the 387 high, 0.98 high of about the 18th or so. It's made a cup formation, now starting to stall a little bit. The 9 is still over the 14, but the price is getting closer and closer to the green line. The weekly chart starting to stall, still fantastically good technicals. And the monthly chart, can you believe 408.71 was the all-time high. We went to 387. That's what, 20 points? 20 points away from the all-time high. Oh, two good days could do it, but that's not the point. The point is it hasn't gotten there. The estimations that are at all-time highs, well, they were yesterday, and now what we're looking at is just a little bit of stalling action. We've got Advanced Micro Devices with earnings report tonight. It's up 95 cents. Horrible chart, a fantastic chart if you're looking at it as a bounce from October, going from 50 all the way to the 130 area, and now it's at 116, just a consolidation. But that daily chart says, oh, it's really kind of struggling. It's got the H pattern. So far successful, so good bounce. 118 will be strong resistance. But if it starts to trade in at any on a weekly basis, any week in August below 105, that's going to impact Advanced Micro Devices. Then we go to the IWM, the Russell 2000, coming back a little bit down $1.50 at 197. It isn't a leg F. I could call this an alternate account, but there's no need right now. Of course, sort of flattening out, potential double top. And that's going to be the issue all the way through, because there are many stocks that are doing this. And you know that I love to look at the idea of the double top going to within a point of the previous high. What happens next? 199.26 was the week of the 3rd of February, 198.75. Well, within a point and a half of that high that was made earlier in the year after plummeting all the way to the 160s. So this is going to be a really important week coming up. Now, here's the other issue. Within the context of gold, as I said, stuck in a range. I don't see anything really bad about it. But wait a minute, the dollar is actually moving quite nicely here. Look at that leg D. It is a very quick peak. A, B, C, leg D. It's filling in beautifully all those horrible red candles. And that just says to me, and I should mention just for disclosure purposes, we've been long since 2018 at about 90 in the dollar all the way up. We've taken a little bit of profits, and on the way down, our stop held in the UUP, and then it ran all the way back again to 114. First one was 121, then it went down to 90s, went to 114.78 and back again, and now it's holding quite steady. And I just tell you that I would not dismiss the dollar in this time frame and that. So now I can put things together. So within the context of the market, all-time highs or highs of significance are very often made very silently. Bottoms are made when everybody is, you can't even walk if you're in Manhattan or down on Wall Street. You just can't walk downtown without a helmet on, because everybody's just throwing everything out with the baby with the bathwater, every stock, everything they've ever owned. And but when it gets to tops, it's a very quiet thing. You've got to dig deep. Not only tops are rotational, bottoms are made in unison. Tops are rotation. So I'm looking at this, I'm saying, you've got the dollar moving quite nicely. You've got the TLT breaking that key support. Look at it, the weekly chart. It's breaking down. Remember with oil, we were talking about this the other day? Now it's breaking that key support, so yields are going higher. But wait a minute, crude oil is actually running within the band. I'll be back. Dow's only up 48 now.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Just before we go to our first call, I wanted to mention I forgot about this yesterday. I don't think I did it. I meant to do it. But we've gapped up, and now the FXI has got a peak D, and it's just about to have a little bit of a stalling motion. That's the iShares China Large Cap ETF. And now I'd like to go to our first caller. We've got John in Philly. John, how are you?
Basil, I'm very well. I hope you're doing the same, and thank you for taking the call.
My pleasure.
Say, Basil, I wanted to ask a very direct question. I preface it by reminding you and myself and sharing with your listeners. Of course, you and I met way back in 2005. I can't believe it's been that long.
Unbelievable.
When I first discovered TFNN on streaming Boston radio. Anyway, Basil, very early in my studies of your technique on your show back then, I was introduced by you to a phenomenon that you described as trapdoor selling. And yep. Basil, a very specific question I've got for you in regard to the S&P 500 as applied to, say, the daily and the weekly charts. And my question, sir, is there anything that you observe using your Chapman Wave tools on those two charts, the daily or the weekly, that would suggest to you there are clues of potential for future trapdoor selling in the S&P? That's my very specific question. If there's nothing, I certainly accept that, but I thought I'd present that question, see what you had to say. And if you don't mind, Basil, I'd like to take your answers offline and just observe via Tiger TV.
Okay, thank you. And that's a good question because it covers the way you phrase it. It covers certain techniques I call them silent techniques, and I'll talk about that right now. So I know you're going to be off the air because you like to go back to your charts, etc. So, John, this is what I'm looking at. First of all, I was discussing that momentarily before we went to the break. I said tops, and I'm not talking about, I don't think this is a major top that I'm looking at right now. I just think this is a breather that is coming about, and it's unfolding in a very methodical way. And that to me says that when you're talking about kind of a trap, when you're talking about longs being trapped, the best way to look at that is when I talk about a right arm extension or a rogue wave. And what happens in a case like that, the price is going, has made a high, peak D, E, or F in whatever number, whatever time frame chart you got, and you start to pull back, and you're absolutely correct in thinking this is a perfect time to short. And you short, and then there's this one move. The right arm extension says that there's a steady move to the upside. It's a number of bars. The rogue wave says there's a sharp move to the upside, and all those people that went short because it's over the previous high say, oh, my God, I knew I shouldn't have. Oh, why did I? I've got to get back. I'm going to get back in. And the price holds up just long enough for them to get back in. And those people that were long and sold say, oh, what was I thinking? So the shorts say, I can't believe it. Everything technically was just there. How on earth could this happen? And then the price holds up just long enough to get both the shorts and the longs trapped, and then it comes down and just as if nothing happened. You look at the bar over a period of 8 or 10 or 12 bars, you look back and you say, gee, what was that all about? Because it was on its way down. There was no reason for it to bounce. This is a little different. This goes under the category that I call the silent top. And those silent tops, I like to look at them in the big picture. I don't see that as a big picture right now, because if you've got a caterpillar, let me just do this right now. I know wasn't your question, but I like to look at every avenue and every resource I can that is pertaining to what I'm looking at, because I need the bigger picture. Look, here's PAVE, as we're speaking, at an all-time high, leg C in the monthly, leg D in the weekly, and a possible leg F in the daily chart. This is the infrastructure and development ETF. So I'm looking at this more as a very necessary breather before we go to new all-time highs in the areas that haven't gone but are on their way towards it. And I have to include the Dow there. So now, and the S&P. So now let's go back to your question. So the question is basically, is there anything technically that I can look at that is suggesting that even though the price is moving up, that in fact we're starting to see a withering of the technicals, just a little deterioration that will show up later. And now this is what I wanted to show you in terms of, I've done this a number of times this week and even last week, where I said, oh, I haven't got it, I'll do this right now. That within the context recent, let's go to blank. Here we go. So I've shown you this, and this is one of the reasons why I practiced all the time with my short-term mini charts, either trading it or just notating it, that sometimes when the 914 is very strong, that's the 9-period moving average, is really strong above the 14, it can take 11 or 12 sessions, doesn't matter whether it's a 1-minute chart or a daily chart, but it can take quite a while before the evidence becomes more visual. And that is the evidence of the price coming back to take out that 9-period moving average and then going lower to take out the black 14-period moving average, and then see the green 9-period moving average shrinking and then crossing negative. But you see, I've got something that says left, right. I call that internal low and residual, internal high and residual high. I do the same thing at the bottom. So now we've got, it's like an earthquake where you've got the earthquake, and then you've got the residuals, you've got the aftershock. and this is the aftershock. In this case, it didn't quite make it to a new high over here in July in the Dow. In this case, it's gone to a new high, and I'm looking at it and saying it has to be bad news. And that's the reason why I mentioned bond yields going quite a bit higher, crude oil holding very well. As the IWM did very nicely, but now JETS, if you look at JETS, that's the JETS, that's the U.S. There you are, just turned pink. So all of a sudden you've got the U.S. airline index basically going negative. So one at a time, I need to see, look at this TLT, very negative. The TBT, that's the opposite, has just gone positive and is holding very nicely. So your question to me was about the S&P. I'm talking about many other, the peripherals, but they are so important because that's basically what's going to help anyone thinking that this is a market that they would like to see a decline so that they can get into certain stocks that they missed, or they want to buy and they want to know when to buy. This is kind of the period that's the most dangerous. So I'm going to go back to the S&P and I'll give you exact numbers that I'd be looking at to say, aha, maybe this is where we're looking. I was showing you the Dow before. I'll do the same work on the blank chart with just the S&P, the 9 and 14 moving averages. I'll be right back. Done.
Attention traders. Larry Pesavento, the renowned trading mastermind, is holding an exclusive live trading event on Wednesday, August 2nd. From 9 a.m. to 2 p.m. Eastern Time, transform your trading skills with the real-time wisdom of a Wall Street veteran. Just $295 gets you a front row seat to this power-packed session, plus a month free of Larry's sought-after newsletter, Fibonacci 24/7, a $97 value. Elevate your strategies, decode the markets, and achieve your financial goals. Remember, this event will be archived for all attendees, and Larry only does a few of these a year. Don't miss this opportunity. Sign up today at TFNN.com. Secure your future and start trading smarter. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So let me just do this here. Back in March the 28th, of 2023 of this year, the 9-period moved positive in the S&P. There was a brief 1 or 2 day period back in May the 4th and May the 5th, where it was pink, and then it turned green. So I can't say on time alone you should be ready for a pink 9-period moving average. It just doesn't work that way. Look, on every dip, you would have expected it to turn pink. That dip in May, it was a sharp pullback, and yet the 9 was, this is what I call the indicator of last resort. Just like the Federal Reserve is the bank of last resort, so this is my tool, the indicator of last resort. And within that context, look, every one of these dips. So what I'm saying is, this is in preparation to be ready to say, because the 9-period moving average is still so strong, but you can see how many times we're getting closer and closer to tackling it. And that price right now is, to give you the exact price, and you hit the green button there, right, green. Yeah, am I supposed to read that? 4559.04. Let me try that again. 456. Yeah, 4559.04. So let's call it 4560. So 4560. It's only 13 points. That's where we before we could do that quite easily. We're at down 15 right now. That would be the first time in days that we've actually gone back to that green 9-period moving average. But look, we have not. Look at the gray line. Only out of the last 8 months, 6-7 months, we've only been underneath the black 14-period moving average a couple of times. So it's going to take a concerted effort to see us go there and say, oh, finally. But do you realize to get that green under the black, you probably have to be down at the 44, I would even say 44.95, 44.88 area. That's where you start to see. That is a long way down to see that green turn pink. So I want you to just clarify that. Now I'm going to go back to the chart itself and say, okay, so the real question is, and I think John's question kind of pertains to a kind of a subtle hint to say, are you seeing something that says that there's going to be a very sharp sell-off in the S&P? And I'm saying to you, you have to first deal with the rectangle formation. And that rectangle formation has the low of just 4 days ago of 45.28. So until and 45.28 takes you underneath the 45.40 14-period exponential moving average. And that's why I've said a top of any sort, when you've got a really strong 9 over the 14, takes time, or it takes just really bad news. I've just indicated to you that the bad news is kind of sitting there, but it's not like on the news all the time. Higher interest rates. Now, let me just do this for 1 second, because I have to give it, I want to do this for myself and for my subscribers. It's kind of what we did a little bit the other day in my video that I do on the weekends, my hour-long video going through the overview and all these different areas. A question came in. I will get to Symbiotic in a moment. It's a stock that we own and had a 50% move up yesterday. We didn't get nearly enough. It hasn't been easy, but from our entry point in the 21s, it did hit 63 yesterday. That's about a 200% gain, but that's not the full position that I really wanted. But not complaining. I'm not complaining. I'm just saying. So look at this. Here's the TNX in leg D underneath the previous E. The weekly chart suggests it really wants to go to a leg D, and that'll be over 41. That's 4.1 something. So let me just give you this number right now. It all pertains to the question that was asked. 40.94, 40.92. So 40.94. At 40.95, the TNX, the 10-year Treasury note, all of a sudden, that becomes a leg D, and that D has 43.33 as a target. If you go to 43.33, that monthly chart says that's going to be a breakout of significance. We've been here many times before. This horizontal line just says Remember, we've been here before, but this is a little different because it's together with, now I want to do something else. This is still to do with the S&P. Hold on. The HGX index, and this is the Philadelphia Housing Sector Index, all-time high 4 days ago, and it's holding really well. But this little rectangle formation says this could be part of distribution. If you look at toll, and the reason why I'm saying this is there are a number of the home builders in the S&P. So you've made your peak D, then it went to a peak E. I forgot to put that in. There it is, E, just under 84. And that just says, I can't yet put a down arrow because it hasn't closed below the 14 period. Oh, I should be able to, but I'm not going to do it just yet. And a peak D in the weekly. Look at Lennar. And the reason why I'm putting this together is you need to have some sectors that have been really extraordinary start to fail, and they've got to be very important. And then you can put it together with the whole aspect, and I'm going to do this. There was a question that came in. I'm putting this together as well because this pertains to mortgages, also a bunch of other things. KRE, which is S&P Regional Banking ETF, made a peak E under the 200-period moving average. It didn't get close enough to tag it, and that just says be careful because these regionals are going to be pulling back. So when I put the whole thing together, I can see enough strength to make this a very, and this is what I really wanted to say, and this now I can go back to what I wanted to say initially. Reason why I had the 914 and price chart up just a moment ago is that this is a process, and it could take from the 4507.07 high of 4 days ago in the S&P, it could take all the way through to sometimes 11, even 12 sessions before the 9 crosses negative. I'm just looking at the day. Today's the 1st. Yeah, it could take you all the way into the end of next week or the beginning of the following week to actually see the S&P start to fail. By fail, I mean it's failed underneath the price that we were looking at in that bar. That's the 45.28 level. And it actually has started to go towards 4,500. Only then will I think the green 9-period moving average go pink. And then we've seen it go pink and flip back to positive. This time I think it's going to go pink, and at least for 10 to 15 sessions, it's going to remain pink. And that doesn't say, oh, crash, crash. It just says, I think we're in for a consolidation. And then an assessment to say, hey, wait a minute. We can't just ignore certain areas. So, John, I haven't spoken about the upside. All I'm going to say is that with this particular pattern, with a 9-period moving average still not getting closer to the 40, you could have residual spikes to the upside. But my guess is that the magnet of this green 9-period moving average right here, at 45.59, that's going to be the trigger. It's going to keep coming back to that. And when it starts to make that resistance, we can start to see the green moving lower towards the 40-period.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So that was discussing the downside to the S&P, which is down 11. But what about the upside? What if this rectangle is just a high-level consolidation and it's building strength because that 9-period moving average is just not budging, it's not coming down. Today, maybe it's just fractionally less than it was yesterday, but it's not really coming down. What if this is just telling you as a GPS saying, hey, I'm above the 9-period moving average. Why would you even think of me going down? Well, the upside says because we've already started leg C in the monthly. Remember, peak B was we spent hours and hours and hours and hours over the last year talking about, can you go to a higher high in the S&P when there was a peak B? Everything else, there's no other way I could count it, but everything else had perhaps an alternate count. There was no other alternate count in either the S&P or the equal weighted. No, what was it? They're all different S&Ps. There's no other way to count it. So I'd say the only other way that you could make a top below that B is if you have a peak A, B, C, and a D that fails under that previous B. That negates that B to say that it should go to a C and a D. So if underneath 4818.62 in the S&P, there is a peak D, I've got to be somewhat careful to say, oh, gee, didn't have enough strength. Maybe the whole thing fails. But the way I'm looking at it with all the technicals so strong, and you've done your one-to-one, the blue and the green, this is a one-to-one Chapman wave. The next part of this technique that I use, if you go to my webinars to see how I use it, this is the Chapman wave one-to-one parallel expansion. I go to the next thing, which is at one of the support levels, in this case, the 9-14 period moving average, and that takes you to just underneath. It takes you to about, oops, what did I do there? It takes you to 47.91. So it's underneath the previous high. This is the one-to-one expansion. But as it stands right now, there is no reason why you shouldn't be thinking there's a very good chance that we do make all-time highs in the S&P based on this particular monthly chart. Okay. Now, if I'm look at the thinning of these little candles, how it's getting harder and harder for it to really spike to the upside. And that says if there is it can't be just a spike. It has to be a closing price spike. If there is a push in the S&P in the next, I would say from today into early next week, above 46.14, that is a close above 46.14, that's just going to help the MACD, which is kind of negative right now, go back to positive. The stochastic, which is good but not great, it's at 81% right now. I prefer it if it was 86%. That would help us have a whole another upside, just really another series of buys to the upside. So I'm saying this is a process that I'm anticipating it'll take about another 6 to 7 or 8 bars before the S&P daily chart actually sees the price, if it starts to make lower lows and lower highs, actually take out the low of 45.28, then take out 45.39 is the 14-period moving average. It'll be below that. But then to start, go to the 45.16 or lower area to see a rolling, and I'm going to put this in here because that my eye says, this is what I'm actually anticipating in words. This is what I'm anticipating in diagram, something like that, an arching formation. I'll be wrong if there's a push into the 46.16 or higher area, closing basis. Got that out the way. Okay. Now a bunch of questions. I didn't finish that. I didn't finish silver. Silver is trading down sharply. Remember I said it's acting way better than gold, but it's a better chart. But today's down sharply, down 2.25%, down 57 cents at 24.40. It's got a lot, the 200-period moving average is 23.61. Could it test that again? Sure can. High-grade copper is now pulling back. Leg D, possibly going to a peak D. And that's the reason why I've got a lot of things here that are going on. Let's say, one by one, these different sectors that were doing very nicely, like copper's not been great, but it's been a very good rally from the low of 3.666-ish up to where it went. Today's high is 4.02 on the continuous contract. Got repelled where? At the Chapman wave falling X formation right there at the inside track repellent zone. Let me just color that in so you know what I'm talking about. There you are, green, a little tiny mini channel. Make it pink and you'll see exactly what I'm talking about. Here's your inside track repellent zone, and lo and behold, it's right there now in the weekly chart. So a lot of things are just saying to me, you're kind of running out of steam, and you have, I think Meta comes up with earnings. They've done fantastically. They've gapped up and held the gap for 3 sessions. That's good. Look at this beautiful up channel. I spent years and years and years drawing in channels in pencil and ruler on my graph paper when I used to hand chart. So channels are really important in my work. I often find you don't even need a lower channel or an upper channel if you've got your moving averages. Look at that. You've got your key support levels just typed right in there without you even thinking. 280 is the key support, but 295 is your initial support in the weekly. And here you are at 320. GSAS-C was strong, 9 over the 14 technicals. MACD is still under 80% at 78. And the stochastic, that is, and the MACD is turned up. Stochastic's a little bit overbought. So you could get a sudden spike to a D, and that's going to help the S&P, help the QQQ as well. What else is coming? Apple. Yes, Apple, Dow, Apple, S&P, Apple, QQQ, Apple, XLK, Apple. It's just everywhere. And you know what they say. An apple a day keeps the doctor away. Actually, I never said that because my doctor lives in the house. So let's see. Let's go right here. 198.29 was the high about 3 weeks ago. It's just stuck, waiting. When it waits like that, sometimes I look at it as distribution. But if the technicals are strong, it says, wait a minute, there are people coming in, new buyers. I don't quite see that right now because the MACD is just barely positive. Stochastic's under 80% at 72%. The on-balance volume is actually a little bit overbought. I think Apple's ready for not a big pullback, but just a continuous digestive, maybe 190. It could pop over 198. It could go to maybe just under 200 or just on 200. But I think it's stuck between basically 200 and 192 for a little while. If it goes sideways for longer, the chances of breaking 192 are going to be stronger. But right now, daily is still good. Had a digestive phase. Weekly made a doji candle, and now it's stuck between that and the narrowest trading range, narrowest sideways trading range, I should say. It's had lots of trading ranges, but they're always making high highs and higher lows. Very tiny candles. This is a very positive weekly chart. It says that the whole area of 190 to 184 should be very strong support. And the monthly chart is going to an all-time high. They say I don't want to fight a trend, and I'm just saying, I'm looking at this and saying, I think there's a slow rollover, and you're still going to see sudden spikes to the upside. But over a period of 2 or 3 weeks, I think we'll start to see lower lows. I don't know about the highs, but lower lows. I'll be back.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, so let me just go through a couple of things here. And before I just do a little wrap-up, I must mention that tomorrow's webinar with Larry Pesavento should be just a real treat. Besides being a huge educational experience, and I don't have to tell those of you who already know his work. I'm just saying, for those of you just really interested, heard about Larry, etc., he does fabulous, just really fabulous work. And when I think about it, he does the same thing over and over. That's what he says over and over. But actually, there are quite a few things that he does over and over. It isn't really one thing. So learning those techniques is, so we're all here at TFNN, we're all about education. That was why I came to TFNN right in the years ago, 2002. I met Tom up in New Hampshire office, and we spoke about it and said, if it's education, I said, I'm absolutely in. And he said, absolutely, it's about education. And that's what we've been doing here. It's really a great force. I mean, all the time in the den, you hear people saying, oh, we've learned so much from so on. It's just, and they're in the den itself, the people are learning. So that's very important. So let me just say because the 9 is still strongly above the 14-period exponential moving average, I'm going for the Dow, and in fact, all the indexes. There's residual strength. It's not internal strength as much as residual strength. As we're making this turn, it's just a consolidation turn. So don't be surprised if there's sudden pops to the upside. But my thinking here is that they're going to get harder and harder to sustain, and that all of a sudden, instead of all these big moves to the downside, we'll start seeing 80 points, 130 points to the downside on the Dow, 25 to then 38 or maybe 47 points on the S&P. We haven't got there yet, but I think we're getting closer and closer to that kind of roller. But selectively, there's still signs of strength. Let's see what Meta does and Apple does this week on earnings. Have a wonderful rest of the day, and I'll be back with Tom a little later today. Check out opening for day. See you later.